Okay. Hello, everyone. Um, we're gonna go over uh, 10/15, 2024. Let's chart quickly. So last night during the morning range, we went through. We were. We had a very small opening gap. New day opening gap. We also had a very small uh, regular trading hour new day opening gap. Or the fuck's it called? Um, Market opening gap, regular trading hours. It was very small, lackluster. I was watching ICT's stream today, and he said a few things that were very interesting or very cool. Mark out 12 p.m. Delineation, or 12 a.m. To 5 a.m. And you're gonna use this range right here to be able to set up to find setups within the 50% using equilibrium. Um, and so we see that actually right here coming up, hits this low into this order block from yesterday. It takes away the afternoon lows right here. Um, and then starts to rally up all the way, takes out these relatively equal highs, and then proceeds to sell off to Friday's low, all the way down to this fair value gap that was left on Wednesday, um, into the order block on Wednesday, and then it kind of stays around there. We're gonna go down to the 5 minute quickly. I wanted to just go over it quickly. Takes out this buy side liquidity, sells off. Um, we are leaving these relatively equal highs right here. 1, 2, 3. We still have highs over here. We took out these a minor buy side. We still have this major right here. It does fill in the 2 hour sell side imbalance, the daily SIBI. If we went to the day chart, we'll see that it did fill in this sell side imbalance right here. Um, and it actually reached all the way to the candle, the next candle. I'm gonna go on a 5 minute chart. Let's look at the 5 minute. ICT said midnight, 5 a.m. Takes out the low, leaves this fair value gap, order block, takes off, boom, breaker, high, low, higher high, confirmation with a fair value gap inside. You could take this right here as your entry, 730. Take it up to the buy side. Where were we aiming? Relatively equal highs. 5 minute chart. I'll be honest, I've slowly started to come to realize that I think I want to trade breakers. Mostly because I like the confirmation that breakers give. Um, I know that we took this sell side. Sometimes I tell myself, well, what about this sell side? We should be keep on going lower, and I would take this fair value gap to go lower, and I oftentimes get stopped out. But I like how a breaker gives me personal confirmation that, like, okay, well, we have this buy side. There's this breaker right here, intermediate high. We break that breaker higher, make a higher high, and so we trade down into it to where, using this fair value gap, I could refine the breaker to this fair value gap and then I take the rest of the trade. While yes, I won't be getting like huge moves like down here, or um, like an order block, this order block, right? I won't be getting this order block going since it's the low, but it allows me to get that confidence that, okay, I know where it's going. And I mean, I've noticed it right here. Say for example, breaks through this low, um, low, high, lower, low, and as soon as it breaks through this low using this candle, I took the very next candle that went downwards into the new day opening gap, 20 handles. I also went all the way down here. I targeted this low right here, and then me being a fool, I took it again to a buy. Should have kept it, but I got stopped out because my stop was below this and it dropped lower, obviously. But it was a very small stop loss. And then we get another breaker. High, low, higher high. Once we got past this higher high, was gonna take this candle. Took this candle high. Went to this like fair value gap that was up here. Target ultimately was this intermediate high, this very small high, and then it went through the day. Let me go through the 1 minute chart just to show you everything again. So like ICT mentioned, get this 1201 all the way to 459, and we're going to use this grading. So where are we at? We're below the 50%. What do we have? We take this swing low, and then we take the swing low, then we drop below, lower, and then we come back up to this quadrant, leaving these fair value gaps. This fair value gap right here is actually the one that this creates the order block. Fair value gap, trades up past the quadrant, comes back down into the lower half, could take it, right? I'm gonna be aiming for these highs. There's a ton of relatively equal highs here, and I got relatively equal highs here. You can totally see them easily. I mean, it was taken here, but at least right here, you know, we got this and these. Now, so you have this fair value gap. Why is it strong? Because it's below 50%. Keeps on going higher, creates another fair value gap. Respected? Yes, it is. Keeps on going higher. If I really want, this is a breaker. High, low, higher, higher. Trades into the breaker, which is also a fair value gap. Look at that. This is also a optimal trade entry, I believe. Breaks the short-term high, retraces down all the way into the fair value or the optimal trade entry. Where can the market go? Using the optimal trade entry, -1, 1.5, 2. Where does it go? It goes all the way up, basically to the 2, about 2.5 OTE. Okay, keep on going. Another fair value gap, respected, wicks down, creates this equal low, leaves it intact, but takes a high. So right now we got a high taken, another high. Are these lows being taken? No, they're not. So what's this telling me? That we're going to be going upwards right now. We're on a buy program. So this is where I'm looking for my fair value gaps. I would take this breaker, high, low, higher high. This is a breaker. I'm not seeing enough displacement for the breaker, in my opinion. but we see a better displacement right here. Comes back down into the breaker. I want to like line up this breaker all the way to see if there's any fair value gaps inside. Where can it go down? Where can it possibly draw down? Well, we have this fair value gap. We have this fair value gap. So should allow myself this permissible range of drawdown extra. Keeps on going up. And then we get this last fair value gap. Fair value gap right here. Where is it below? The 50%. And then we keep on going. Now, ICT said about doing this range only for when we are consolidating. We're not taking off in the Asian range. So like say for example, this range is not protracting. So like for example, if we saw something like this in the Asian range, don't do that and we'll get burned. But if we have something like this, can easily take this for a setup that pops up in the afternoon. Where does it start to spool? Well, it starts to take off at 450 to 610. Macro. Where is the next one? 550. Another fair value gap to 610. Right? Last one, 650. Now, what does a macro do? It runs to either inefficiencies or to liquidity, where there's an inefficiency right here. So at 650, drops down low. You could technically take this, dropping down to this. What's this? If I take this entry, 612, and I'm dropping down to this right here, 595. That's about what, 10 move, 15 move. Morning session. Don't forget 7 a.m. delineate start. Got relatively equal highs. Makes the low. Initial buy side, initial sell side. Takes initial sell side, runs up. Takes initial buy side, keeps on going. Makes a new initial buy side. Drops lower, leaves the sell side, but takes this swing low and this swing low, these relatively equal lows, and runs up. Where's the target? Relatively equal highs right here, left from this morning. And then the morning session, very choppy. Something I wanted to note to myself, I don't think I wrote this in my journal. I will write it in my journal. I should be writing in my journal, is that the morning after a bank holiday, stay out of the fucking trade. First hour, wait for a silver bullet. Or first 30 minutes, wait till a silver bullet. Because look at this. Choppy price action. Lackluster range. What's this? 31 to 12. That's like 20 points. You remember ICT says you need at least 40. First presented fair value gap. I got this right here. What is that? You know, I will be leaving this for tomorrow because first presented fair value gaps have been shown to come back and traded to. So it will be there until it is referred back to in the future. Sells off all the way down. $10 a.m. Let's see. Could use it as a inverse, but it's not. You're not gonna know. You're gonna have these lows still. But let me see. Let me tell you. You have these lows. It's broken through. Taken. I still have this low. These lows. these lows. Now remember, this is a market maker sell model. ICT said this is market maker sell model. Why? Because we're going to be looking at previous price moves in the past. So what is made during what PD arrays are used in the past and respected. We got this one that I mentioned. We have this one. And then we have this one right here, but I'm not going to mark it. Drops down, passes these, a lot of force, leaves these equal highs for the future. This will be a draw on liquidity sometime soon. So I'm going to just put buy side. Buy side liquidity. Look at this. We got accumulation, distribution, accumulation, second stage distribution, accumulation back into it, have a fair value gap, trades into the fair value gap, proceeds to sell off again. Oh, why am I in a trade? I should take it out before and then sells off all the way down to our Friday last week's low. Don't forget to always mark out the lows from previous week, previous 5 days, highs and lows. Just have them listed, let them know, because the price does refer back to them. And then we proceed to get this choppy price action. I'll be honest, we're in this range. I did not like how we were in this range. We went up, came back up, left more highs, left some more highs, equal highs. Like, we were in a sell side program, but this to me is horrible price action. Like, I did not feel comfortable trading in it, and so I just didn't. Really wanted to because I felt like I saw stuff, but I didn't see stuff. I didn't see nothing. I let it run. High resistance liquidity. Best thing I could do for myself, not even touch it. So I just kind of ignored the session. Let's look at it. This is my first time looking at this session, and I didn't. You know, we have a breaker low, high, lower low. Nope. Low, high, lower low, breaks. See, like, low, high. I mean, this is supposed to be the breaker. Not respected. To me, this lets me know that there's manual intervention in the market right now. High resistance. But what do we have in the afternoon? 1:30 to 2 p.m. I have marked out my highs, my lows. Alright, I'm going to remove this because we know that what this was. The bottom wick. The bottom half of that for that day. We got these highs. We got these lows. Relatively equal lows. Market took out this, but left this intact. Closed it really close though. We have these highs. Market creates these relatively equal highs. Starts to break down. And I personally, from the morning to now, I wanted to see price action moving hard. So what did I do? Um, I saw price finally broke below this low right here on this candle. Price finally broke below that low, and that gave me confidence after seeing. It should have given me confidence here, right? This is the breaker, right? Comes back into the breaker, filling up this fair value gap. I mean, leaving this fair value gap, sorry. Creating this order block, drops down, trades back into this order block right here. But I wanted to see this confirmation right here. We closed beneath this, told me okay. So when it came back up, I tried to manually sell, got in late, but sold in 23.27, and I bought out at 307. 20 move run, went all the way down, came back up, and then I saw this again. I saw the reversing up after this move down. I was expecting this to be a play, so I bought here and I sold below using this as my stop. Bad move, to be honest. But it reversed back up. As soon as I saw it close above this, it was a breaker, validated breaker. Closed back below. Bought as it was coming up. Sold at this point early. So 319. Sold at 339. And then I wanted to I thought it was gonna reverse. Didn't. It went for this high. But you know what? Still a good move. I ended up coming back positive for the day. Nice job.